Okie dokie. So we're still a couple of minutes away, but just so we can get used to this whole platform, this is our first time doing one of these live interviews, and I'm so excited to have Matt Falconer with me today. He's with O2 Mortgage. He's the best lender around. So Matt, welcome. Thank you so much for joining. If you want to say hello.
Hello, everyone out there. Thank you, Kaelin, for the kind introduction, and I'm happy to be here today.
Great. So I'm Kaelin Wagnermarsh. I'm a realtor with eXp Realty of California. And due to the pandemic and due to so many changes that have happened over the last 30, 60 days, I mean, it's just been all over the place. There's a ton of information coming at us, and it's so important to be able to navigate through that. So with homeowners and home buyers right now, it's a little bit difficult, I've found from talking to people, to understand what challenges are ahead of us, if it's possible to buy a home, and what they can do to overcome any hurdles that may happen. So, Matt, before we get started, is there anything that you want to talk about the overall climate, just to kind of bring everybody on the same page about what's happening right now and why it might be a little bit more different buying now or refinancing now than it was, say, a year ago?
Yeah. There's a lot of changes, both positive and negative, and they affect each other. So obviously, the negative is the unemployment and the potential forbearance. And forbearance means being able to skip some mortgage payments because you can't make your payment. So that's has to do with unemployment. So all those things tie together. And that's risky for the banks. So the banks have pulled back and they're limited on certain products that they generally offer or have traditionally offered. So pulling back by either fewer of them, pulling back by maybe harder to qualify for, or maybe a higher interest rate for some of the one-off sort of products. In general, though, the market's been very, very good and rates are extremely low, and the government is artificially holding rates lower to keep the economy chugging along and to keep housing moving forward. So that is the positive, is we're seeing extremely low, historic low interest rates, making buying a home cheaper, basically.
Great. So, as far as the biggest changes and the hurdles that buyers are facing right now, or homeowners that are trying to refinance, what you're saying is because there's increased risk right now from the bank's perspective, right? We're having unemployment numbers, people are going into forbearance because of that unemployment, right? So, because of those things, it's getting a little bit tougher, not impossible, but just a little bit tougher to get some of these products. So
Correct.
we mentioned the unemployment. So there's been a lot of talk about changes in jumbo mortgages, getting jumbo mortgages. Another term that's thrown around is cash out and HELOC, non-QM. So those are the big ones that people are hearing about. Can you
Correct.
talk a little bit about what those are?
Yeah. I speak mortgage, and I think what we need to do is explain some of these terms so that people that don't speak mortgage can understand what it is you and I are talking about. So, jumbo, that's a big loan, right? Jumbo means anything larger than what Fannie Mae and Freddie Mac are willing to lend. And that's the traditional loans, the conventional loan. So anything greater than 765,000 in our county is considered jumbo, and that works for most of the Bay Area too. So that is a jumbo loan. The other term you mentioned was QM. QM means quality mortgage. So the regular loans lower than 765 are generally quality mortgages. If they're non-QM, that means they're different. They were either limited income or stated income or bank statements or maybe jumbo. So QM mortgages, they're riskier. They've got some hair on them. So innately, those are riskier. So then when you talked about a home equity line of credit, people say HELOC, home equity line of credit. That is a secondary loan that is in second place underneath or behind the first mortgage. those are riskier because the second lender is in second place. If something happens to the borrower and they can't pay their mortgage, the first lender generally gets paid off. The second lender might not get anything because they're in second place. So it's riskier for that position. They might not get any money if something happens to the borrower. So that's home equity line of credit. And then in terms for cash out is for an existing homeowner who already has a mortgage and has a equity, and they want to take some equity and turn it into cash. So they pull literal cash out, maybe to pay off debt, maybe for home improvements, a combination of anything. Maybe they want to invest it. That is risky for the banks too, because they're taking more of the property and giving the person actual cash. So it's risky for the banks, and so they're limiting that as well. So those are some of the definitions.
Interesting. So
Yeah,
you mentioned the amount for jumbo mortgages. So we're talking here from the perspective of Santa Cruz County, right? And
right.
so last month, our median home price was 949.
Mhm.
So when you consider that, and you consider the jumbo mortgages being 765, you said?
Right.
Right. So when you consider that, and our median purchase price, do you think it's a large percentage when we consider the jumbo loans and non-QM that you mentioned, those non-cookie cutter mortgages? Do you think that's a large percentage of the mortgages that people need to buy within Santa Cruz County?
No, it's not a large percentage, but it does count. So non-QM is pretty rare. It's really a small percentage, maybe 2% of the whole industry. So that's really, really small in general. Jumbo is more prevalent because we live in a high cost area. So that is about 20% of our business is or was jumbo.
Hmm.
But there are workarounds for this. So instead of taking one big loan, you can have a large loan and a small loan. So the combination of a first and a second mortgage will work instead of one big loan. You're just kind of dividing the loan up into two pieces instead of one big mortgage. So there are solutions there and workarounds.
I
Jumbo is not really that risky, but the banks that do these, generally big banks, Wells Fargo, Chase, some of the large depository banks, Bank of America, places like this, they have to lend their own money on this. So it's not guaranteed by Fannie or Freddie. So they are not wanting to be at risk. They can't sell this loan to Fannie or Freddie. So they're just risk adverse. They don't want the house. They want the money. So they were charging higher interest rates. So that's why jumbo is a little bit riskier. And the rates are just a little bit higher. The products are available. It's just at a higher premium right now.
Exactly. So if somebody if that's still their only option, it's just a little bit more expensive right now, is what you're saying.
Definitely. And something I wanted to mention as well is mortgages are unique. Buying a house is specific very much to the person, the buyer. Whatever works for that person, if it was a non-QM or if it was a jumbo, or maybe it's a VA loan, which is a government loan, it's very specific to the person. So you and I are speaking generals right now. So if you have a unique question, that's what's really important, is what I'm trying to drive home today and to my clients or future clients or anyone, is talk to your mortgage person, talk to your realtor, because if you're not sure about it, then that's all the more reason to just get the answers and talk to someone to find out. With that said, not all the answers are equal. Just
Mhm.
because one person can't do it doesn't mean the other person can't do it. So your mortgage lender can't do X, Y, or Z. Well, maybe I can, maybe I can't. Get two opinions, because
Right.
not all answers are equal. Not all banks are equal.
Right. I mean, now more than ever, especially because there's so much, even at times, conflicting information, making sure that your source of information is really a guide for you. Because, like
Correct.
you said, with a smaller portion, but a portion being that jumbo market, being the non QM market, you want to make sure you have advocates on your side that can say,
Sure.
look, maybe this isn't working right now, but this is how we can work around that.
Right. And then I always advise to people, regardless of COVID or anything, is we're talking about roughly $1 million home purchase, or let's say it's on the low end, so a $500,000. maybe getting a second opinion is really wise just in general, just to make sure you're doing due diligence and finding what's best for you in any market, especially though right now with all the changes. So there's so many changes, it's definitely time to double check in your specific scenario, maybe with other sources as well as your current source.
Right. Okay, so moving on with some more of those challenges or hurdles. So because of what's happening with our phasing system, now we're in phase two, that's really encouraging, but there are still people who are unable to get back to work. So one of the hurdles I've heard is verification of employment. So can you touch a little bit about that, about how that's different right now and how it may be really important or difficult at this particular time during COVID-19?
Sure. Yeah, definitely. So again, it goes back to the banks being risk adverse. So they want to make sure, absolutely sure, that the person still has a job that can repay the mortgage. They just want to make sure that the people can pay them back. That's their goal, is to get paid back. So you have two general categories. You have someone who's on a payroll, or you have someone who's self-employed. So a W-2 person who's on salary or payroll, we want to verify with pay stubs and all the normal paperwork that they have a job. But in theory, a person could have already had a pay stub and then have lost their job. So that we do a written verification of employment at the very end of the process and a phone call. Does that person still work there? Because people are getting furloughed or on maybe 75% of their general work time. So not full time, they're not part time, but 3/4 time. There's a lot of that, or no job at all. So the lender just wants to make sure the person is still working. One of those small challenges, though, is with everyone working from home, or not everyone, but most people, the HR people are working from home too. So getting a hold of the HR person who's at home to verify that the other employer, the employee, the borrower is also working from home, getting a hold of them sometimes is a little bit challenging. And especially right at the end, it has to be done at the final step. That's a little bit challenging. It's always taken care of, but it's a little sticky sometimes. Then you
So
have the self-employed people. Sorry to interrupt you. Self-employed people, depending on the small business or large business, some of these businesses might not be working at all. And so a great example of this is the hairdresser. They can't even see their clients. So how are they earning money? So the lender is just saying, you can't even cut hair. You can't do the toes, the nails that that they want to get done. And, all our wives want to get done, of course, too. They can't earn money because just innately their business is shut down. It's not even allowed to operate. So restaurant people, they're really over scrutinized for all the right reasons of making sure they're earning their money, but it's just another step. So if there's no change, then great. But if there is a change, then everyone needs to be aware of it, the borrower and the bank. So just double checking on that.
So, given this whole phasing system, this could be a potentially real big hurdle for folks in those specific industries because I assume the lender would want to know, look, if you're not working right now, I want to know exactly when you're going to be working again. And at this point, is there really a way for us to determine how long this phasing system is going to last? So is that a hurdle that's pretty difficult right now?
I can't say it's difficult because it's a really easy answer to figure out. The only challenge is when people don't reach out and the borrowers or the potential borrowers haven't raised their hand and said, hey, I've got to change. The lender has no idea if there's been a change because the person hasn't told them there's a change.
Mm,
So all the more reason to talk to your person now before you buy a house. Has there been any changes to your employment? Is your business still open? Is your business still working? And if it is, it's very easy to prove. Show me the bank statement that your business is still working. Show me your business bank statements. That works. Okay, great. No problem at all. Are you still working full time? Great. No problem at all. We have a form called the verification employment. Fill it out. There's no problem. It's just communication. And like anything else, again, COVID or not, over communicate. You're borrowing hundreds of thousands of dollars. Let's make sure we're on the same page. Pretty simple.
and I think it's important to just really say again, drive this point home. Each situation is so different. There are so many variables that goes along with obtaining a mortgage or refinancing. It's your specific situation. So really want to drive the point home. Our contact info is above. We'd be happy to talk about your specific situation. Because these are really just general points that we want to bring up.
Totally general. And I have a couple different situations of people buying homes. Uh, One person was completely not at work, but we knew when they were going back to work. So we were able to approve their loan. They can't close the loan until they go back to work. So then we timed everything right. So when they already went back to work. So now we just need the pay stub. As soon as they get the pay stub, which coincidentally was yesterday, docs are out today. They're closing next Wednesday. So timing of it, just because we knew that there was potential or hurdle, navigating around that because we talked about it early.
Mm,
Another person went to 75% work. She was reduced to 75% of her normal time, but her co-borrower, and so she's nervous that she can't buy the house because her income is reduced, but the co-borrower had a little bit of a raise. So she
mm,
raised her hand, I've got an issue. We calculate the numbers. Okay, does the math still work with her at 75% and the other guy at a little bit more? It works, but bringing it up early allows them to go buy the house, and they're going to be closing on their house. So you need to know this, and it's all totally specific to the person.
right.
And if you have no changes, you should also tell your lender, look, there's no changes. That way they know that you're good and you know you're good, because the loan programs may have changed as well. So just
Right.
communicate.
Right. Okay, so we touched on some of these hurdles. We talked about cash out, jumbo, HELOCs. We're all now well versed in what those mean.
Yes.
So, some other changes obviously are safety protocols, right? We're
Yeah.
kind of conducting business in a different way. Now, what are some positives that you've found during this COVID-19 pandemic? With these safety protocols in place, what are some positives that have come out of it?
The positives are the rates are really, really low. I'd say that's the biggest positive is the money is cheap. So that's great. Rates are 1% lower than they were a year ago. So when you're borrowing hundreds of thousands of dollars, 1% less is hundreds of dollars a month cheaper. So it's better. That's the main positive I would have to say. The other positive silver lining, obviously mortgage related and housing related, is there are fewer people that want to buy a house right now because maybe they can't buy the house. Maybe they just don't feel comfortable buying a house. So there's just less people out there buying houses. So we're seeing a lot of activity and they're able to capitalize on this. Not everyone wants to buy a house. Timing's got to be right for you, but some people think the timing is great and they're taking advantage of it. So those are two big positives.
I'd say just to note on that competition piece is just as a side, right? So our median sale price last month was 949. The month previous to that was actually 925. So we saw an increase in our sale price. So while there is less buyers out, there's also less sellers out right now. So we have really low inventory, but there still are people that are looking to buy homes. We're seeing a lot of activity in 950 and below, but things
Yes.
above 950, they're moving a little bit slower. We're seeing a little bit less competition there. Perhaps it ties into that jumbo market that we were talking about. Still too early to say there's plenty of sales going on. It's just a little bit slower. So,
Yeah, and there's limited data too. It feels like years we've been in this because every month feels like a year, but it's only been 2 months. So the data is
right,
pretty limited. And we were all shell shocked when this happened. So I think everyone took a pause for at least a week or two. So
right.
there's lagging data. The jumbo market is a little bit slower. And I would say, yes, it has a lot because of lack of product and the rates are more expensive. So
Hmm.
plus, people's stock got hit really hard. So a lot of the jumbo people were going to liquidate their stocks. Well, those took a big haircut when the stock market crashed and it's now recovering, but they have less money. So less money and the rates are higher. Plus, there's not that many houses. It's been slower. And I can't speak to what the market is going to do. I personally think that it's going to be great because people still want to buy houses and now they're caught up in a place. Maybe imagine being sheltering in place and you want to buy a house and now you can't and you're stuck in your shelter in place for months. You can't wait to buy the house. So I really feel like there's going to be a mass wave of people that are going to want to buy houses. So the competition, I think, will be even worse, like harder to buy a house in the near future once this is all lifted.
We'll have to see what happens. But working with the information that we have now, another positive that we talked about a little bit offline is that overall, the products that are being affected, would you say are a smaller portion of our market?
Yeah, I would smaller. It's still a portion though, because if you live in that portion, it's 100% of the market to you. So I would say roughly 25% if I had to guesstimate a number on the loans that are less available.
Right. And so you mentioned that the rates are really low. Do you have any gut feeling? Do you think they'll stay this way? Do you think that they'll soon go up? What are your thoughts on that?
Well, I try to take my gut feeling out of it, but with that said, all the indicators and all the people that we listen to, the smartest people from Wall Street and the mortgage prognosticators is the term, all major economic indicators are that rates should stay low for a long time. And I don't know how long it's going to be, if that means 2020 or through 21, but everyone's saying a long time. So I have to follow suit with that opinion that rates are going to stay really, really low. Something else is everyone likes normalcy, right? So we want things to be not changing because we feel normal about it. So over the last month, rates have been extremely flat, maybe a touch up or a touch down, but relatively flat, bumping around the low 3% range, which is historically low for a month. And so that creates comfort for lenders. They're seeing this market flatten out, the mortgage rate market, the mortgage bonds and things like that. So because that's been stable and relatively flat, I don't think they're going to drop a whole lot, and I don't think they're going to go up. So my guess is over the long run, mortgage rates stay really low, stay in the same range for a long time.
Great. So I just want to make a little side comment. It looks like a few people are joining us. So I just want to make sure that there's a Q&A section and a chat box. So if you have any questions along the way, go ahead and feel free to leave a comment or to add a question to the Q&A section. We'd be happy to cover it if we don't already through our talk. So let's talk about, we touched on this a little bit about overcoming some of the hurdles as we were going through them, but I just want to make sure that we talk a little bit more about that. So we talked about some of these problems. Why don't you go through some of the ways that they can overcome?
The biggest overcoming of any hurdle is over communicate with your lender and your realtor. Have there been any changes? That's the only thing we need to know. If there's been a change, we need to know about it. If there hasn't been a change, we need to know about it so that we can ensure that you can borrow the money that you want to buy the house that you want. And over the years, I love saying this, I've come to the realization, nobody wants a mortgage. We could be great and pleasant to talk to, got lots of advice, that's great. No one wants the mortgage, they want the house, right? So just make sure you can get your mortgage that will get you the house you want. And so we're just giving answers. So overcoming the hurdle really is just make sure you can still get your loan. And if you can't, then maybe the timing just isn't right. Maybe it's when you go back to work or whatever the situation is. Maybe the time is perfect. Maybe it's not, but we have to figure that out because you're buying $1 million house. Something I failed to answer earlier is changes. So some of the products that I want to bring up that are gone or limited, I think they're going to come back. It's just a matter of when they come back. So the Great Recession before was housing based. This is not. This is obviously a virus related thing in a macro global economy. The old recession was a housing based thing that started in America because of bad loans. With that said, products got really, really limited in the recession back then, and they disappeared. The jumbo went away, other things went away, and they came back. So when will they come back? I don't know, but they will be coming back.
Right. And just because you brought up the last crisis, the last recession, I just want to make a distinction too, because I've heard, I don't know if you've had these questions too, people asking, are we going to see the same thing in the housing market that we saw that last go around in the Great Recession when the housing market crashed? A key difference that I like to bring up among quite a few is that inventory really was a big factor in what happened last time in the housing market. There was so much inventory because people were just walking away from their homes because of so many reasons. But now we're not seeing that. Now we really have that tight inventory. And so it's just a completely different environment. So I just like to drive that home with folks just to make sure, there's a lot of information going around, a lot of different types of headlines, but because, statewide, Santa Cruz County wide, things are very specific here locally. And so it's so important to get that information, what's happening locally in the housing market, what's selling, what's not, how quickly are things selling, are they selling for multiple offers? That information is really specific to the market that people are in. So again, just driving the point home, it's really important to talk to your mortgage provider. It's really important to talk with your realtor on a regular basis. So you're really given those tools to be able to strategize in the market that you're in.
Yeah, I couldn't agree more, by the way, with the difference of the recessions, because this is a recession. I don't know if technically we are yet, because you have to go through 2 quarters to get to a technical recession.
Mm.
But I could not agree more. People were walking away from their house literally because they were in a bad loan. You could put no money down, make up your income. You just pretend you make money, and they'll give you 100% of what the house is worth. So you didn't prove you had money to pay it back, and you put no money into the house, and then your house dropped and your mortgage payment went up. You're like, why am I even in this house? It's worth less than what I paid for it, and my mortgage just went way up. I'm out of here. And there was a max exodus of people that did that, which caused all the foreclosures to happen. So then there's all this inventory, and you nailed it, a bunch of inventory that's overvalued. No one wants to buy it because it's priced too high. And we're opposite of that right now. Everyone that's got a mortgage since then till now has proven without a doubt, with all the paperwork, that they can afford it, that they have the credit for it, and they put some money down into it. Plus the values have gone up. So we're actually sitting on all-time high points of equities. The equity position of America is at an all-time high. So the likelihood of people getting foreclosed on are going to be reasons because they either can't pay their mortgage, or the death, divorce, things like that are always in existence. But we're at an all-time low of foreclosures. And let's play this out a little bit. Let's pretend someone did lose their job. If they have a ton of equity and they can't pay their mortgage, they're probably not going to just walk away like they did before. They'll sell the house. Okay.
Exactly.
Well, I mean, so that's a big difference. So then there's all these buyers who are, hey, I'll buy it, because there's way more buyers than sellers. So that might happen because this, again, all goes back to the unemployment, which is causing mortgage forbearance to spike. There are 4 million more. 4 million mortgages are in forbearance, which means 4 million people are not paying their mortgages. That's and we are in mid-May right now, and that's continuing to rise because still people are losing their jobs. So will that equate to more inventory? Possibly, but you nailed it with the micro markets too. Those are national numbers, obviously, and luckily in Santa Cruz, we're so close to Silicon Valley. Our unemployment numbers locally are really, really low in comparison to the 20% range that we're at right now nationally.
I see. And so you mentioned forbearance just now, and I want to focus more on what people should navigate when getting a mortgage or refinancing, but just because it's so much in the news, and perhaps there's some homeowners that are going to watch this and are hurting a little bit. We were speaking yesterday about a change that happened with regards of forbearance. Can you just explain what forbearance is and the options available to people?
Yeah, so a forbearance is basically when you raise your hand and you can say, I can't make my mortgage payment, put me on pause. And right now, through the CARES Act, you can do that without any penalty. And if you have a traditional Fannie or Freddie loan, your lender will put you on pause for, I believe, 4 months. And I am of a strong opinion, only do this if you need to, because it will hurt you later, regardless. And so it's not supposed to hurt your credit, but we never really know. It could. But if you need to take a forbearance, then by all means take a forbearance. I think talking to someone about it who knows what they're doing is obviously good advice. Talking to a lender, talking to your servicer. Sometimes people maybe have a refinance where they can save money and they haven't lost their job. They're just worried about it. maybe a refinance is better. Maybe if they can take cash out, which is still available but limited, maybe getting some cash out so they have some buffer money and feel good money or whatever. Maybe that's a better option than pausing your mortgage, because if you pause your mortgage, at some point it's going to come back to bite you. Not so much even with the credit score, it might not hurt your credit score, but a bank later on down the road is going to say, Mr. Joe Blow, the borrower, hey, you couldn't pay your mortgage before. I'm going to make you wait a while. That's called seasoning. We're going to make you wait a couple years until we've proven that you're well beyond this phase. And so that could impact your future borrowing ability big time. And those rules haven't been defined yet, but they will be coming out for sure. Just like a foreclosure or a short sale or a bankruptcy, a modification or a forbearance will negatively impact your ability to borrow money in the future. So I say don't do it at all if you don't need it. Don't even consider it. Why would you do it if you don't need the money? It's not about needing the money, and it's just about, if you can't pay your mortgage, get a forbearance. If you can pay your mortgage, pay your obligations. I totally believe in that.
Right, right. Okay, so what are some things you anticipate to get better or worse in the coming months? And what are some ways to prepare?
Okay, I think rates are going to stay low for a long time, as we talked about. So that's going to be better. Things that are getting worse, forbearances, missed mortgage payments, those are spiking, and that's going to impact lenders. So we don't know how, but it will. Just like the COVID curve was going up and flattening, well, the forbearance and the unemployment is still going up. It's behind the curve of
Mm,
COVID. So that's going to get worse, because also people in forbearance, you miss one payment. Well, then the next month you miss another payment. So now that same person's missed two, and that same person's missed three, and that same person's missed four. So that spikes because it accumulates monthly. So those are going to go way through the roof. Um, I don't know exactly how that's going to hurt anybody except for the mortgage lenders, which they will impact the people down the road later. But that's a negative. How to prepare, over communicate. If there's any change, just call it out and figure it out. I don't know how to prepare for that except for just figuring out your own situation.
right. And so also we talked a little bit about this. The products are likely to come back, right? So if you fit into that jumbo market that's now becoming a little bit more expensive, or you fit into that non-QM market, it's likely that these products will eventually come back.
Yeah, they will come back. It's just a matter of when. Because, take for example the jumbo person. These are generally fairly well-off people who have hundreds of thousands of dollars down. Those are the people. I always use the old rule of thumb, like, would you lend your money to this person? Well, those are the people that have the money to lend to. So I believe that will come back. And there always is a need for that money. There's a bunch of people out there that want to borrow it, especially in high cost areas like the Bay Area and Santa Cruz, of course. The average home is $1 million. We need that product. So again, it's available. It's just limited.
Hmm.
So that's going to come back and be more prevalent. It's just a matter of when.
Right, right. Okay, great. So let's talk about you a little bit. So, what are some challenges that you're facing personally during this time? How are things different for you?
Um, a little bit different. It's generally business as usual for me. Luckily, I feel extremely lucky and happy and blessed. You name the adjective, I feel that way, because there's people losing their jobs and struggling, and maybe they have people that they know and love that are sick. I don't know anyone who's sick, and business is great. So I feel just really, really lucky. I have more time with the kids. I absolutely love that. I think I'll miss that.
Hmm.
Business wise, of course, a little more challenging working from my office independently, or with some of my staff at home, because I can't lean out the door and ask them about the Smith or the Johnson file. We have to send text or communicate electronically. So there's a little bit of a lag time there, but we're highly functional and working on how to make this successful. So, also I love meeting clients face to face. I love bringing clients into my office and using the big whiteboard that I have and penciling out every square inch of it, and on what it's like for them to buy the house and what their payments look like and all that stuff. I can't do that. So, doing that over Zoom or with a phone call and emails is achievable. I love to meet with people. So that's, I guess, a challenge. I miss that. Um, but all in all, it's been great. I hope I answered your question. I think I may have missed something in there, but
No,
it's been great.
let's talk a little bit more about how you've shifted to service clients in a great way during these safety protocols and social distancing. How are you operating a little bit differently, and do you think that's helping the clients?
I think it's equal for the client because sometimes it's harder to well, I can't say it's worse, it's different. A face-to-face conversation where you can sit down with someone for an hour and talk through everything, the communication is better, it's more clear, you can go through different strategies that you can't do over Zoom. Zoom is wonderful, it's a tool that we're learning to use and becoming extremely fluent in. It's just a little bit different, you can't have that face to face and really get down to know somebody. And they're buying a house, they're buying $1 million thing. I want to know them, they want to know me. So that's different. But part of the part of the changes of people over communicating because of all the just big changes is we're getting into deeper conversations, because it's like, how are you doing? You're really getting to know the people, because it's a really hard time. People have lost their jobs, or they know someone who lost their job. So it's the conversations are a little more intimate, if you will, because it's such a crazy unique time that we're having better conversations, and I really like that. It's neat to understand people's challenges. So better conversations is great to have. Let's see, I'm meeting with going to see properties has been a little bit obviously hard to do, mixing it up with the realtors that we know and love. Can't go see them and do the fun mixers and things like that. That's one of the good parts about of our industry. It's fun.
Yeah,
So the camaraderie of that I totally miss.
right. It'll come back. It'll come back.
For sure. Yeah.
Great. So it sounds like there's a lot of tools to make the experience easier for clients. Even though we can't meet face to face, it'll be a little bit different. But things like Zoom, being able to do screen shares, really pulls back that curtain, allows people to see what you're seeing, and allows those deeper conversations given the
Yeah.
topics that are being talked about. Right.
Yes, yeah, good point. Actually, one thing I totally forgot is screen sharing, which I had not done before. Screen sharing is really cool because I can then show my computer, like, what does it look like from my view? And then it does pull back the curtain. The person can go, oh, that's how the rate is figured out, or oh, that's what my mortgage looks like from you, and they get to see what it is I'm looking at, and there's a little deeper understanding there. So that's been pretty cool.
Great, great. So tell us a little bit about you and your company and what sets you apart from everybody else.
Okay. Well, my company I absolutely love. So we are O2 Mortgage. So got the shirt on. O2 Mortgage is just a branch of a bigger company, a bigger mortgage bank called American Pacific Mortgage. And unless you're in the industry, you may not have heard of American Pacific Mortgage, but they're a huge mortgage bank. So not a brick and mortar bank like Wells or Chase or anything, who they do credit card loans and auto loans, and you can go make a deposit. They do everything. Um, we only do mortgages. That's what a mortgage bank does. So we are nationally recognized as one of the biggest corporations. We're in, I think, 48 or 49 states. And we're a really big and solvent mortgage company. I love it. It's a great platform. On top of that, we are a hybrid model where we are a broker and a banker. So we can bank loans and keep them through our bank, which is great. But if something is, we don't have something, we're also a broker. So I have an option to go outside of the bank. And maybe if the rate is a little bit better, I can go to a broker channel. Or there's a weird product that I don't have, maybe I could broker it. And then so every day I look at banked products and brokered products. And depending on which one's better for the client, I can choose, and I have so many choices. I absolutely love it. It gives me just so many choices for the person, and I can tailor the mortgage for them because I have so many different loan products for it. So that's how our bank works, and I absolutely love it. And then I think we're one of about 300 branches. Our main branch is in Campbell, and then we have a Santa Cruz office as well, which I run. And we're just a few of us. We're a pretty small 15-person, 12-person company, but we do a lot of volume. And the volume that we do, because we're in an expensive area and we do lots of loans because we do quality work, gives us a lot of clout through our bank. So we have so much leverage with our bank because of our track record, that it's just we've got it dialed in. I absolutely love it. And I guess personally for me, I've been doing loans for about 20 years, and I've had some good successes, and I've been doing it a long time.
So it sounds like the structure of your office, you're able to really problem solve. It gives you the tools to be able to make sure that you're giving your clients the best options. And that's really great. I've heard that a lot. So tell me a little bit about your team, right? Because you work with a team. When someone comes to you, there are different people that they communicate with that are specializing in the different steps of obtaining a mortgage, right?
Yeah. So we designed that specifically to keep people sort of in their own lanes or within their own wheelhouse or within their strengths. So my ability is not in collecting paperwork or calculating the income. We have people that are great at that. We have a setup person who helps the client bring in their paperwork and get it all into our office just to help them get the paperwork in. So that's their job. We officially call them the paper collector or the master of paperwork, whatever. It's kind of fun. We try to keep it light at our office. So I get to do the big ticket items of helping people figure out what loan is good for them, what product fits them, their specific needs or wants or down payment, whatever is germane to that person. I help figure it all out. We always have processors. Processors they're not a client facing position. They only work inside the office, and they just literally process A to B. They take paperwork from us and give it to the bank or the broker. That's not a client facing position. We also have product managers or pipeline managers, I'm sorry, that are like my right hand team. Those are assist me with clients. Once we figured out we've got their paperwork in, super simple. They have one person to help with that. I've helped figure out what their rates are and the product they're going to do. Now my teammate steps in and they help navigate the client from there through the underwriting process. Hey, we need something updated here with the pay stub, or sign these papers. And they update throughout the month or so that it takes to close a loan. And that person they're great people, and they're just they're at the desk like 9 to 5, and even 9 to 5 is not even giving them their props because we've been so busy. It's like 9 to 7. They're just killing it and doing an amazing job. I cannot get enough props to my processing and teammates. They've been
Great.
working super hard, and they're just phenomenal. I couldn't do things without them. And I know you know this, but we have everyone set up to help the client. So it's a great setup. I can't say enough about it.
Great. So now more than ever, because of all the scrutinizing that's going to be going on, paperwork is going to be even more important. And I got to tell you, as a realtor, the biggest complaint I have from clients about their mortgages is how much information they have to provide. So I'm going to assume it's only going to get worse. And it's really great that you have a team to really help people move through that.
I hope it doesn't get any worse or more. And honestly, I have to say this: there's not that much paperwork. If you have a regular job, you need your pay stubs, you need your W-2s, and you need your taxes. It's the bad communication from less than average lenders that don't give an exact list on what we need. Oh, get some of this and get some of that. Oh, I forgot
Right.
to ask for this. Oh, I forgot to ask for that. We don't do that. It's here's your list, exactly what we need, and here's someone to help you with it. One time. It's not that hard. Just get it done clearly, communicate. Like that's the theme here. It's pretty straightforward. Oh, I can't find this. Oh, is there a workaround? Can I help you find it? I don't think there's going to be extra paperwork because there is nothing else we could get. I mean, pay stubs, W-2s, taxes.
Right.
This is fun. I always think this is super funny, by the way. Oh, I heard it's hard for self-employed people. Actually, it's easier. They don't need pay stubs. They don't have them. They don't need W-2s. They don't have them. All you need your tax returns. Okay, you can't find them? Let's call your CPA. I think we can help out.
Right. Right. Wow. So we talked about a whole lot. So
Yes.
overall, seems like it's a little bit more difficult for certain types of products. They're not necessarily a big part of our market. Sounds like there are some workarounds, but the overall theme seems to be the best thing to do is to communicate with your mortgage lender and your realtor to make sure you understand what's happening right now, because things are changing daily,
Definitely.
and
Yeah.
to make sure that you know what to expect in the market that we have right now. So I want
Yep.
to thank I want to thank you so much, Matt, for doing this. I want to mention again, if you need either of our contact information, they're listed right above here. We're happy to do any type of one-on-one consultations, quick 15 minutes, 30 minutes, just to give you an idea, hey, this is my situation. What do you think works best for me? We look forward to hearing from you. Next week, we're going to be doing a virtual buyers seminar. So stay tuned and check out our Facebook pages to see when that will be. Have an excellent day. I thank you all so much. Matt, did you want to say goodbye?
Yeah, I'd like to say goodbye and thank you for setting us up. I love giving out information and teaching people on what they can do. So thank you for the opportunity. One thing I did want to add in terms of just the conversations that people have, the normal conversation to figure out what someone can do takes about 10 minutes. You can figure out pretty much everything in a short phone call. It's not 2 hours. It doesn't take that long to kind of figure out, okay, what do you do for work? What is your down payment? It's just a few questions. And then navigating through the paperwork. It's a simple process. So get your answers early.
Great, great. Okay, thank you so much. And until next time, have a good day.
Thank you. Bye.